So today we welcome Julian Kwan, the CEO of InvestaX, to discuss his platform and tokenization in the financial industry. Thanks for coming on today, Julian.
Thanks for having me. Excited to be here.
So, Julian, can you tell us a bit more about the InvestaX platform and what your goals look like?
Sure. We started one of the first crowdfunding platforms back in about 2015, focused on real estate and private equity. Realized that that first generation of online investment platforms was quite low tech, P2P, equity crowdfunding, whatever name you gave it. When you peel off the marketing website, people are investing in pieces of paper. There was no liquidity for these investments. Surely it was a better online version and sort of more of a global audience, but it wasn't sort of a 0 to 1 moment. So 2017, an ICO boom, we had some friends in the space. We looked at the tech and immediately saw that this was, well, pretty much in my mind, kind of crowdfunding 2.0. And, but not just for small investments, this would be the new infrastructure that held all investment vehicles, funds, company shares, debts, equities. It's a better system to use. It's more transparent. It's more appealing to regulators. And eventually it would start with companies like us saying, all right, full tilt on tokenization. What does everybody need to tokenize their assets? They need advice and consulting to structure the security token. They need a licensed platform to launch it. They need a token issuance platform to launch it. Essentially, they want secondary trading venues, OTC and exchange, and they want custody solutions. So we embarked on a mission to build all that together on the one platform, which is what InvestaX is bringing to market. Kind of the first time in the world that private market assets would start to look and feel like public market assets. And from a regulatory perspective, Singapore is extremely bullish, aggressively trying to own blockchain across everything, crypto, central bank digital currencies, security tokens, everything, trade finance, carbon credits and security tokens, et cetera, et cetera, et cetera. So we were in the right spot, added, exchange application, license application, functionality. And we took a position that, in a whole world of digital currencies, you're going to have a whole world of digital securities, and they're all going to combine and create this explosion of value. And we wanted to be one of the infrastructure rails in the middle of the whole kind of vortex of the space. Yeah, so we now offer this end-to-end issuance, trading, custody of security tokens, global deals, real estate, private equity, venture. And yeah, now this year, it's all really starting to come together because the challenge, the short history of the security token space was, the birth in 2017-18, basically failed ICOs calling themselves STOs, or not even that, mainly the SEC calling these non-security products security products and then giving them big fines. So the birth of the industry was pretty much as bad as it gets because the only thing people could find was like, ICO is an STO, fine $10 million. And it was like, oh, this sounds like it's illegal, right? And none of that makes sense because the security following the securities laws is not illegal. Like saying security tokens is illegal is like saying securities is illegal. It's illegal if it's not done properly and you don't follow how you issue and trade it. And the regulations don't even reference paper. So if you issue someone a paper share and it's a security and there's rules, and if you issue someone a digital share and there's rules and regulations, they're the same rules and regulations. So we were sort of thinking, all right, well, mad confusion, 2017, 18. But then 18, 19, 20, 21, a lot of good companies were getting licenses to issue, trade, and custodize security tokens. So there was no infrastructure for 2 or 3 years because people, getting some of these licenses take literally 2 or 3 years to get. Broker dealers were getting, enabled with the tech and getting licenses. Exchanges. If you go back 2 years ago, there was no security token custodians in Singapore. Now there's like 7, as one example. If you go back 3 years, there was one security token exchange called Open Finance. And now I just wrote a blog and I wrote down the predictions for 2022, which you can find on the InvestaX website. I think I listed 25 companies that are licensed to issue or trade or custodize security tokens now. Like, wow. Massive expansion. And so that was now the year that we've come to. Not only have we got to, infrastructure is now laid, because people were saying, what's the point of security tokens? Global distribution, liquidity for liquid assets, and that was great. Okay, so where do you get this done? And the answer was back in 2017, like nowhere. Why? Clients got to go get a license before they can open up and offer a security token exchange. So in that last couple of years, InvestaX, other groups, OSL, Archax, groups like Securitize, Black Manta in Germany, Atlas One in Vancouver, like now the infrastructure's there, and now we're going to start to see a lot more issuances, because no high quality fund manager, asset owner, or institutional or high quality could issue when there was no understanding of a full life cycle. And so that's all changed. It changed dramatically. And then you've had obviously what I call the regulation of crypto that's been in full force for a couple of years. And now you've got evidence, which started last year, of the capital markets players playing in the crypto. So you're like DBS Bank and Standard Chartered Bank, and all these guys are going that way. And then you had FTX and Binance and Bitfinex launching tokenized stocks, which are a security token. So you've now seen the highest and the biggest players on both sides of the aisle moving across to the other side's assets.
Sure.
And so that's amazing. That's what we thought would happen. So that's kind of where it's got to. And, I guess the last point on this was like why we're still mega bullish on this. And even though it's been a tough couple of years trying to, build businesses and being early and not enough product and all the fun stuff when a whole new industry begins. But now, I think that, the narrative should be, well, the narrative is, if you look at the history of the public markets, every massive expansion of capital came when new technology came to the marketplace, right? Electronic trading, the first ETF, which I like to talk about, because the first ETF was about 30 years ago and it was considered a failure. They raised $11 million and everyone said, whoa. And now it's a $7 trillion asset class, right? So if you think about the private markets, which is real estate, private equity, companies, everything that's not public, that market's about 4 to 5 times bigger, is a big general statement, because it's trillions and trillions of dollars. So just these crazy numbers. But the private markets are 4 or 5 times bigger than the public markets. And now you're bringing the DNA of the public markets, which is tradability and transparency and digitization of the assets. You're bringing all that DNA into the private markets. And we're going to see this massive explosion of value. And you're going to start to see, all of these new assets coming out, NFTs, fractionalized NFTs, security type NFTs that have got royalties and incomes. Again, that's a security token. And we're going to see a whole new birth of new investment structures, because we're now using a technology vehicle to hold those assets, right? Smart contracts. So yeah, so much exciting stuff going on.
But before we get into more tokenization, can you let us know why you chose to build on Hedera?
Yeah, so we took a position a couple of years ago when I think we were one of the first platforms in Asia to go full tilt on the security token space. And our position was the opposite of many in the space. And the position of many in the space that I think is still completely incorrect is that they believe that the only way this was going to work is if they went and built a private blockchain, which essentially is, a better version of your Excel sheet, right? And the theory was, or the argument was, probably two things, which they're not bad arguments, but we just didn't buy it. One of them was, the private equity group or a bank, they need everything private, can't see anything, and they're not going to go for these public chains. The second position was, what if one of the 11 or 13,000 nodes of Ethereum is being run by North Korea, and you transaction and you've paid gas fees and you've just facilitated terrorism? Again, pretty wild. These were big things. I mean, this gave the birth of R3 Corda, which is a private blockchain that's backed by 42 banks. This gave the birth of a bunch of other private blockchains that that have huge backing, right? Huge following. We're agnostic to the argument of private and public. I think there's a world for both, right? But fundamentally, the difference with public blockchain use is a global interoperable system, right? Anyone who's accessing the protocol is there, right? And anyone can, right? Assets, whether they're ICOs or NFTs or security tokens, you've got an architecture that's truly global. And to me, the real point of blockchain in the first place, at least for the capital markets. And so just taking a bit of a long-winded journey, but the point was that we wanted to build an open architecture. We wanted to work with the best protocols in the world and be able to offer our services, which was license compliant, end-to-end issuance and trading of security tokens, to the entire network. In this instance, Hedera's whole network. The public blockchains have huge networks, they've got huge capital, they've got huge technology talent, they've got huge product development, and huge innovation going on all over. They also have capital to invest into the ecosystem, which makes a big difference. Private blockchains are software companies. They want you to pay them to rent their software, and then you start using it like normal software. And then essentially, if you're trying to build a business and an ecosystem, you've got to get every single person in the world to come up and plug in, right? And there's no interoperability with cryptocurrency. So again, I think the reason for working with Hedera, again, I'm not poo-pooing private chains. I think there's a world for it, and there's a customer base for it. But we are much more excited by the potential and the scalability and the opportunities that come with working with like Hedera, who also has put a lot of energy and effort and investment into trying to solve the issues around security tokens and cap table management and distributions and a lot of thought there and very intelligent. And I know there's a lot of big companies that are plugged into the Hedera ecosystem, again, because you can immediately. And for us, that was very, very exciting. So, with Hedera, we also work with Toko out of DLA Piper and the great team up there. And that's a fantastic story as well, where you've got one of the top 5-10 law firms in the world building a token issuance platform in partnership with Hedera. And we're the first broker exchange, security token exchange broker partner for Toko. Which means that you now have a global law firm basically selling security tokens as a concept, being able to get all the clients comfortable from legality, have chosen Hedera as an optimal blockchain to use for the issuance of these security tokens, and then plugging into us, and again, talking about that ecosystem and allowing us now to be a friendly service partner to all of those assets, and we help each other grow. So yeah, so that's kind of the long and the short of the excitement that we're doing. And I actually been chatting a bit further with the Hedera, let's just call it organization, heavily focused on at least one focus on ESG and carbonization. So we're now looking at some really exciting tokenized carbon credits and this whole new asset class, right? Just around that. And so that's another great example. Like you've got, coming down the pipeline, you've got, carbon credit security tokens. Typically, most people don't even know what I just said, but in essence, the carbon credit thing has been pretty much a high-level institutional kind of movement. If you can then bring those assets down and trade them as easy as cryptocurrency or stocks on interactive brokers, you're going to bring way more capital into the space as well. And again, just another example, a real tangible example of like new assets coming out through tokens and protocols. And yeah, just hard to keep up with all the stuff that's going on, actually.
I hear you. And I actually, one of my questions was going to be, is Toko a competitor or collaborator? But you've already answered that. So I guess I'll come up with something else. Have you talked to Dovu about any of the ESG stuff?
No, and we should tell me more about that.
Yeah. We'll get you guys in touch, and they're working on that. They already have tokenized stuff, and they're working in that space. But we'll get you in touch. That's for sure.
Yeah, that'd be great.
All right. So, how and when are people going to be able to get involved with the InvestaX offerings?
Yeah, so we had a broker-dealer license back in 2017. So we were doing a bunch of, call it paper-based offerings, private equity and real estate. We've done over 30-something deals. So you can register today on the InvestaX platforms. We have approximately 4 or 5 offerings in a primary, which means, it's a new investment offering and people are raising money. I think there's a security token of equity and a Bitcoin mining operation. I think there's a real estate fund. There's a VC fund. And so that's available today. We're now working on our first secondary listings as well, which is exciting, which are funded projects that are now looking for some form of liquidity or have investors looking to, buy and sell out of those positions. It's going to take some time. If I just get a little bit of airtime like here or whenever I do, I like to try to get everyone's mindsets to a realistic playing field. And in terms of secondary trading, I think 2 things are important. First of all, you need to build up the marketplace, right? When any asset launches, there's low liquidity. Same thing with Bitcoin, same thing with anything. People have wild estimates of like snapping their fingers and the whole of the private markets being tokenized overnight, like a zillion of equity. But so the reality is that now we're in the first wave of listings. I think a lot of those trades will operate more like OTC trades. And then as this grows out, you'll get traditional market makers coming in. You'll get bigger STOs, income producing, easy to value. And the way that we look at it is that, just like in the public markets, also this is the excitement and also, the reality. In the public markets, NASDAQ, for example, you can only list there and trade as a company if you're Uber or WeWork or the next biggest thing, right? And for 99.9% of startups in America, there's nothing for them, right? There's nowhere to go. That's why everyone wants to go public, because that's like the only place to go. Or you stay private, which means kind of no liquidity and, not being a public company.
Sure.
But there's, hundreds of thousands of more startups in the US than there are listed startups, right? Mm-hmm. So there's a much bigger marketplace that's not served by NASDAQ and public markets. In the private markets, which is the private markets, in the security token space, the super exciting part is that, we believe that all these assets will be tokenized, and you'll still have a situation where you'd have like potentially an InvestaX with the largest STOs, traditional market makers there, et cetera, et cetera. But then we also have like an OTC board where, let's just say, everything that's not big enough for market makers can still have a digital OTC platform for trading. So, and that'll be actually the lion's share by number of offerings. Why? Because if you have, Julian's juice company and it's a $200,000 company and I put 50,000 shares in security tokens and I'm me and I want to sell them to someone, well, there's no market maker who's going to bother getting involved in that. But I'd still like to share it. There'll be a lot of buyers that might want to buy it. So I'll just put up there and say I'm selling 50,000 STOs at $1 each. That's it, as a venue. But that's still wildly better than the old world, which is, me just telling you I'm trying to sell shares in my company and, running around the world and getting nowhere fast. So there's a whole bunch of primary STO offerings, which is new people launching new funds, new companies, new assets, Series B, C, D funding, whatever. There's a whole wall of things that were funded and now for sale. And then there's going to be exchange traded STOs. And we're now in this middle part. We're doing the industry. The industry is now doing the first STOs, and then we're going to move into the exchange. And one thing I wanted to mention as well, because I'm going to try to make the use of this time and plant seeds all around. One thing that's super interesting that, again, no one that I know in the world is talking about yet, but we're trying to push this narrative. If you think about cryptocurrencies and, super exciting, well, actually, whether you list on a DEX or a SEX in a crypto world, as the token owner or issuer, you're responsible for creating the first liquidity pools, right? Whether you're doing it yourself or whether you have a hired market maker, but they still want a couple of percentage of the tokens and some USDC or USDT or whatever the pairs are. so the token holder is the liquidity provider, right? Now, in the traditional markets, and I like to just keep it simple and talk about, NASDAQ again for a startup. If you and I go list our WeWork company, we're not responsible for market making, right? We don't have to put our own money in. It's just like there's a whole system there, right?
Sure.
That's how it works, right? And so for the security token space, we need it to be more like crypto, right? If you want to come, and the best example is your $50,000 shares in your juice company, right? For a small offering. If you want to come and list a security token, you should bring the first liquidity pools, right? Which would make sense because no one else is going to do it. No one else even knows your company, right? So you should turn up, whatever, $10,000 of your juice tokens and $10,000 of USDT and start that first liquidity pool. And I think that's what we need to get to, because otherwise the world's just expecting to go from no security tokens to like the same situation at NASDAQ for startups. And that's just not realistic, and it's not actually going to, that'll happen, but that'll still be a subset of the security tokens. Most of them are going to have to be pools created by the asset owners, because the assets are so obscure that no one, your juice company or whatever I'm doing, right? My real estate fund that's investing in, Tasmania, Australia, that no one has a clue about, whatever that is, right? And on that note, we also co-founded another platform called IXSwap, which is the first automatic market maker and liquidity pools for security tokens and NFTs. And it's a sister platform to InvestaX. It's going to help provide liquidity. But essentially, it's a Uniswap for security tokens. And it's the same DNA that I just mentioned there, where you turn up, you can create the first liquidity pools, and therefore it gives a home to any security token offering, big, small, ugly, beautiful, whatever it is. It allows the first tradability and pools for those security tokens. Just like Uniswap explosion came from the fact that 99% of tokens couldn't afford $1 million to list on Binance, right? Mm-hmm. So where did they go? And the answer was nowhere. Up until Uniswap said, hey, we got this amazing innovation. You can come here, but you create the first pool, and bang, boom, like insane explosion of value and an incredible product, which was then copied by Sushi Swap and Pancake Swap and all these other names of food. I have no idea why. Yeah, so that's the mission, that's the journey, that's the status of the market right now. And yeah, we're super excited to work with Hedera and really appreciate you guys giving us some airtime, and we look forward to coming out this year with a lot more security tokens on the Hedera protocol.
Yeah, good stuff. So the participants, do they need to be accredited investors?
At the moment, yes. There are signs, at least in different markets, where there will be access to retail investors. Mm-hmm. And we're looking at how to smooth that out over time as well. There are pushes from both sides. You've had massive private equity groups like Apollo and BlackRock, I think, have been petitioning for retail access to sort of the private equity space. Funnily enough, with all the regulation headaches in America, it's actually become one of the best markets for retail investors to be able to access investments. And out here in Singapore, a couple of years ago, which is not law yet, but the government, or the regulator, the Monetary Authority of Singapore, actually put out a consultation paper, which is what they do when there's talk of adjusting laws or new regulations, and then they get the market feedback. But basically, they said secondary trading at the moment is only for accredited investors, but with blockchain, we see this whole new innovation. We think that retail investors should be able to access the secondary trading. Yeah, and it makes sense, right? Because why do retailers allowed to, the theory in the public markets is you and I have WeWork, we go list, smart investors fund us, we take it public, anyone can then buy it, and it's transparent, it's tradable. So the same thing's going to happen for security tokens. With that transparency, the regulators will allow greater access. And that's why we think, now you're seeing around the world, not only private companies tokenizing this and that, you're seeing governments, Delaware, Wyoming, Switzerland, Germany, saying, let's move our company share registries off paper and let's put it on distributed ledgers because it's better. So it's not only just a private company, tokenizing these markets now. You're starting to see movement from the governments to move all their companies to ledgers because it's better, right? They can open up their laptop, see who owns it, see who's directing it, which they currently can do, but there's lags, right? Because in the paper world, changing shareholders, directors, etc., there's always paper floating around weeks between people. So this will be the one true way that they can have instantaneous access and knowledge about who owns what, which is bullish for the security token space.
Well, that's what we're hoping for. More inclusion, more access, all the way down the line. You mentioned you had a few offerings already, a handful. What do some of those companies look like?
Yeah, so we had, I think there's a Bitcoin mining company that's raising equity in a security token. There's a VC fund called Cosmo X. It's a tokenized VC fund that's targeting blockchain infrastructure. So it's a bit of a mouthful, but you still have a bunch of VC fund managers. They're going out investing into companies in the space as equity, like a normal VC fund, except the shareholders get a security token versus a paper share, which is infinitely better, especially for the VC world. When you think about most VC funds are a 10-year target, the data shows that it's actually more like 14 to 15 years for investors to fully exit, and hopefully they've made money. So in this day and age, asking people for money for 15-year hold, it's amazing that people still give them money. I mean, 15 years in the speed of the world we're in now is it's a lifetime. So now you're starting to see more and more VC funds saying, look, we want to raise money. We still need 10 years, 15 years, because that's the model. We're investing in companies. It takes time. But you can have a digital share and you can buy and sell it in and out of this. So if you want to hold it, you can hold it. But that's a much more attractive structure for investors. So essentially then more of these tokenized VC funds will raise more money, because if there's one VC fund investing in orange juice companies and there's another one doing the same, and one of them gives you a liquidity option and the other one doesn't, and you still want to invest in juice companies, where's the money going to flow, right? So that's, I think there's a real estate offering. And then, there's a lot of interesting things coming down the pipeline. I think we have, and we're really excited about new, interesting alternative investments. We don't want to do banking products. We don't want to do things that the banks do. We want to do pretty much the opposite. I believe under due diligence now is a luxury car security token, where this company's got this huge pipeline of luxury cars and they're tokenizing. These are multi-million-dollar cars, and you can buy these security tokens, which is pretty cool. We're looking at some of the first NFT funds. So the fund itself would be a security token, the investment strategies to invest into NFT-related infrastructure and products.
Sure.
And a whole bunch of other stuff that the team's working on.
Oh, good stuff. So, Julian, thanks so much for taking the time today. Do you have any final thoughts before we let you go?
Final thoughts. Lots going on. We'd love the audience listeners to register on the platform. They'll get education. They'll get deal flow, access to all the latest and greatest. We're heavy on education and promotion. And sign up. And we'd love to do more with Hedera.
All right. Well, we'll send them your way. Sounds good. Thanks again, Julian.
Okay, great. Thank you. Thanks for having me. Appreciate it.